Oh man, so Jerome Powell just spoke at a conference for the Wall Street Journal, and Bitcoin turned what was a green day, a nice green day, back in the red. Yes, we're now down 0.5%. We're going to break down exactly what Jerome Powell said. We're also going to look at some potential indicators which could be suggesting we are coming close to a bottom on crypto. Make sure you hit up the like button. Don't forget to subscribe. As always, if you like my perspective, consider joining the course member live streams, Ijaz.uk/member. Let's get straight in the charts here. I was sitting here listening to Jerome Powell and thought I'd summarize it for you guys. I was looking at the 1 minute chart, and you can see just leading up to the meeting, which was this dotted line here, Jerome Powell, we were sitting here at about 30,000 for Bitcoin, just waiting for this meeting to come about, 30,189-ish. And then when Jerome Powell spoke, you saw we fell as low as 29,400. Now, what was it that Jerome Powell was on about? So as we fell, we can see we're now getting a retest. I'm going to come on to what that means from a technical perspective. But what was it that Jerome Powell was speaking about? Naturally, markets are going to be spooked that Jerome Powell may come out too heavy with the punches in terms of tightening interest rate policy. Now, overall, he didn't sound too hawkish, which was really good. He sounded quite pleased, in my opinion, that the market was starting to tightening. He mentioned again that we need to get inflation down to 2%. Yes, we know that, Jerome Powell. He said financial conditions have tightened quite a bit, but he wants to see inflation come down clearly and convincingly. He kept saying that. So remember, we don't get our next CPI reading until I think the 10th of June, roughly off the top of my head. So we still do have another good 20 odd days until then. And then he was saying we're going to keep pushing interest rates until we see that happen. Now, obviously, in the last meeting, he said we're not going to see a triple rate hike. He didn't U-turn on that. He didn't flip-flop on that, which is good because that would have really crashed the market. And then he also spoke about Russia and Ukraine and how that whole issue has continued to place difficulties on supply chain. So he mentioned that as well. And he mentioned the fact that the COVID lockdowns in China continue to put some supply shock, again fueling inflation. So he again mentioned that, again, he said he's happy that financial conditions have tightened significantly, but he needs to see growth come down from the high levels we saw last year. So he's happy. Remember before, when Jerome Powell was talking about increasing interest rates, particularly the first 0.25 hike, the market was almost taking it in its stride, and we were wondering what's going on. And if you remember at the time, we were saying we don't want the market to play chicken. Even we don't want them to play chicken and not budge. If the Fed says we're tightening, the Fed wants to see a red market. So give him that red market, and then we can move on. So now I think Jerome Powell is starting to get happier than the market is really starting to decline. I mean, we're 1% or 2% away from a full 20% bear market correction on indices. So he better be happy. And he says he wants to continue to see that happen. Now, he was also asked, what will you look to decide to increase or decrease the pace of hikes? And again, he just pointed to inflation and says, look, if the inflation is moving in the right direction, we can slow down the pace of these rate hikes. If it's not, we're going to have to speed up, which makes complete sense. And he says he's going to make the decisions on a case-by-case basis. So overall, spoke a whole bunch about the labor markets as well and the need to balance the labor markets. We know that's a challenge for him. And then I think the bit which kind of moved the market somewhat to the downside here was when he started talking about a softish landing. That was one of the bits which I didn't quite like from the meeting, because remember, he was adamant over the last few meetings we will get a soft landing, and now he changed his verbiage to a soft-ish landing. And when he was rightly pulled on it by the interviewer, the interviewer asked him, what is the difference between a soft and a softish landing? And Powell used the analogy of a plane and say, look, sometimes you get that perfect landing, buttery smooth landing on a runway, and other times you get that kind of little bumpy landing, but it's still fine, still a safe landing, no issues, and it didn't make any difference, right? So I think he's almost saying, look, it's not going to be as smooth as you think. There will be some pain and there will be some difficulty, but we're going to get there eventually. And you can see how Bitcoin responded. Bitcoin fell initially, fell as low here as 29,400, and now you can pretty much see as he stopped talking, the price started coming back up. We're now sitting at 29,700. Now, the slight worry here, and I'm going to explain whether this was a worry or not, is when we zoom out, and I'm sitting here looking at the 4-hourly chart, and on the 4-hourly chart, it's very clear we are creating a bearish continuation pattern, right? This is a bearish continuation pattern with a move to the downside, back to the bottom of the wedge, and maybe back towards 25,000. Now, remember, my price target is still that we're going to get to 24,000. And from a technical perspective and an on-chain perspective, we're getting a whole bunch of confluence around this notion. So we'll go through that as well in terms of what is going on. So stay with me to the very end. We're going to see a whole bunch of on-chain metrics, which suggest to me that we could be going to 24, but 24 definitely is that bottom. I mean, all the indicators are pointing that 24 is that level. So interesting that we're creating this little bit of a bearish continuation pattern here. It's a shame that Jerome Powell speaking right when we're on the bottom where we wanted a bounce to run to the top. That's when he spoke. So could we break down from this pattern now and start heading towards the bottom of the wedge, which would get you to about 26 and then onwards to the wick here at 25 and then onwards to 24. That's what we're looking at. Now, we know the stock markets did the same thing, right? So if I open up the take a refresh of the stock markets, we know crypto is following the markets, and the Dow Jones is up 1%, 1.5 on the S&P, and 2% up on the Nasdaq. But if we go into the latest candlesticks, just to monitor the exact same thing that we can see that when Jerome Powell was speaking, we saw the same thing take place. So if I go back here and you go to where Jerome Powell was speaking, was all the way right here. You can guess it, right? So Jerome Powell spoke here. 1 second, and put the vertical line there. And you can see the S&P and everything took a downward dump as well, but it's recovering since he stopped talking. Okay, so we've seen the same thing in crypto, same thing in equities. Bunch of nothing burger, not too much of an issue. He didn't say anything, thankfully, which is too bearish to the downside, but I still maintain we could be heading towards 24. And the reason for that is that's the best way we're going to prepare. We're now sitting at fear and greed index on 8. This is a very, very low score. If I show you the yearly chart on this, look where we are. I don't think we've had this reading for a very, very long time. I mean, I don't think we had it all of last year, if I'm not mistaken. We'll have to go back and check, but I don't think we got as low as that. I think we got as low as, like 10 here, as you can see, May 2021, and we had another reading of 10. I don't think we fell below 10. So this is proper extreme fear right now to get to these price points. And again, the whole lunar chaos around it is all contributing to these issues. Now, don't forget, we had the preliminary voting on the lunar fork. That vote came in as 90% against Do Kwon's plan. We covered that off. If you've not watched my video from earlier, make sure you go watch that. It really does explain what the suggestion was. Now, the official voting is tomorrow. This is not the official vote. I'm seeing some miscommunication going out. The official vote is tomorrow, so make sure you stay tuned for that. We also had Do Kwon being summoned to a parliamentary hearing for UST and Luna. So not a fun day for Do Kwon. And then the other things we want to cover off is this, which is not been a good time for stablecoins right now. And you guys will know when this FUD was happening, I posted a very clear video about Tether and about stablecoins. If you're on my course member live streams, we made it very clear. We made a point of it to stay diversified in your stablecoins and ultimately stay out of stablecoins if you can. And thankfully, you've seen 7.6 billion of Tether redeemed since the start of cryptos. In other words, it's fallen from about 80 billion worth of Tether to about 73. So they've lost just about 10% of their market cap in a couple of days. So a lot of people are not trusting Tether right now. We know there's been a fear around Tether for a long time. I've covered this since as far back as September 2021. And for me, I just could not trust large amounts of cash in stablecoins. If I need to be in them, it's a necessary evil because I need to get into a crypto or I'm trying to get back out into fiat. And that's it, right? And even if I am in stable coins, I'm mixing it, and you probably there's certain ones you want to be in other rather than some others. We also had Fed's Bullard come out and say that the markets have all but priced in the central bank tightening. This was said earlier today, but obviously we've had Jerome Powell just speak and reaffirm this. We've seen the financial conditions tightened, and again, Jerome Powell in essence only wants to do what the market has priced in, and the market is pricing in now the 50 basis point hikes month on month now. Meeting by meeting now, and Jerome Powell's probably going to go and deliver that. And as long as inflation comes in line with that, he will stick to that plan. A few other things to look at is this. Speaking of stablecoins, we have to look at this. This is the crazy thing that started happening. USD starts to depeg 9th of May. We've then seen some issues with USDC, BSD, and DAI. They've been going up, okay? And at the same time, you saw the other pegs go down. So you saw Tether decouple because people are rotating Tether into USDC, BSD, and DAI to diversify. That's the right thing to do. Now, I still wouldn't trust all these coins. They're better than some of these ones, right? This was obviously algorithmically backed to UST. Tether is obviously collateralized, but people question how good their collateralization is. And then you have some of these other ones which you may want to rotate into. At least USDC are a bit more transparent and they're in cash and cash equivalents as far as they share with us. So that is what you're seeing here. You're seeing people moving around their stable coins. And it's a very dangerous market right now with the prices so low in crypto, like we saw with UST, a little shock to the downside. And some of these stable coins could really be in trouble. And that could cause problems for the crypto market. Few other things to cover off. We're seeing that the Bitcoin Purpose Fund holdings have increased, which is really interesting. You're seeing that a lot of buy the dip pressure was coming in from funds. Part of this is to do with Australia setting up their fund as well, their ETF fund, and they're they buy a portion of the Bitcoin purpose ETF as well, but there is also buy the dip fund buying going on in here. So the smart money is definitely doing some buying. Right, rapidly, we've got so much to cover off today, guys. I also want to show you the Dixie, because interestingly, we've been monitoring the Dixie, which is the dollar index. And remember, when we zoom out, we saw that every time we get rejected here on the dollar index were really important moments for crypto. But unfortunately for us, the dollar index throughout this downturn has been really, really strong. If I zoom back into this run, this has been a really, really strong run for the dollar index. But now we're starting to see a couple of 2 or 3 red candles now, daily candles coming in at the 105 level. Remember, crypto is inversely correlated. So if we can see the Dixie come down to collect some support, that could be signs that we can finally start to get a move on crypto. And we're not finished there. Let's now head over to Bitcoin. I hope you guys are keeping up. Bitcoin weekly chart. And the crazy thing we're now seeing on the weekly chart, apart from the fact that we're in super bearish territory, we're super below our EMA ribbon, which is very bearish, is the fact that we've had 7 weekly red candle closes in a row. And they've not just been small ones, they've been quite big red moves to the downside, the last one being the particularly worst one. And now we've opened up the 8th red candle in a row, which is not great. And I think that's pretty much unprecedented in Bitcoin, at least since I remember. That is a crazy move to the downside. And again, is that signaling that this is pure saturation, fear and greed at the peak, Russia-Ukraine war, tensions around inflation, Luna collapsing, right? Is this peak FUD, and should we now be buying, because are we getting close to the bottom? That's what we need to understand now. Now, I quickly want to run through a few critical on-chain metrics which suggest we could be starting to get some bottoming indicators. These are all from Glassnode charts, which a lot of you are probably familiar with. But as you can see, the first one we want to look at is net realized profit or loss. Okay, so this is when you realize loss. And what you can see is in June, we had our highest fall to the downside. Remember, June 2021, Bitcoin fell quickly down to 29,000. A lot of people were in a realized loss, and you could see that was sitting at 3.4 billion. Now, the next highest day we had was this whole Luna crash, which just goes to show how big a deal this Luna crash was, and very likely that crypto would not have fallen to the 25,000 level without this whole Luna saga going along with it. Also want to flick along to this, which is your relative realized loss. Okay, so again, relative realized loss is similar to now what you'll see here is the levels we're now at are very similar to some critical moments in the history of Bitcoin. So the first time you saw this spike, this is the realized loss, is at the start of the 2018 bear market. You could see how quickly you fell from 20k down to around 8k. That was the first big fall, and people really did panic after that huge run up. And then the next time it spiked was when you were really at the depths of it, and you fell well below 4k towards the end of the 2019 bull run. Now imagine if you were accumulating in this period, you would have then had a really big run up to, would have been a great time for you to buy the dip to the next run up. The next time this realized loss spiked was in COVID, of course, when everybody did not expect that massive fall to the downside. That therefore got a lot of people in a realized loss. And then similarly, you had your May 2021 sell-off, and now the Luna blowout. So this is a significant peak, and you can see that here from the data as well. Moving on, this is an important bit to understand, and this is one of the reasons I'm so I'm preparing for 24k Bitcoin being the lowest point. Now, we may not get there. We already wigged down to 25. This could just be the run up to the upside, and that's great. But I just want to make sure I'm not missing a trick here, that if we do head to 24, I'm ill prepared, or I don't have enough cash to buy the dip. I want to make sure I'm prepared for that. And I definitely don't want to chase the green candles on the way up. So we're currently sitting at about, well, at the time of this screenshot, the low price point we touched was 26,513. That's 9.5% off hitting the realized price, which is $24,000. Now, let me explain what this is, okay? So the realized price is, in essence, it uses relative market cap, right? Realized market cap to basically decide on what is the market cap when the coins were last moved, okay? So when the coins were last moved, it will take the market cap at that point, divide by the circulating supply, and you will get your realized price, as opposed to normal price, which uses the market cap, the normal market cap that we're accustomed to. Your realized market cap only uses when it was last moved from the wallet. In other words, what it's trying to get to is what is the aggregated cost basis of everybody that's holding Bitcoin. And it comes out that it's about $24,000 right now. But when you're below $24,000 or close to it, the majority of people are in a loss. because they're now heading close to their cost basis, if not slightly below it. So this is really a great indication of a potential bottom we could be reaching. Now, the other interesting metric, the final one I want to share with you guys, is this accumulation chart. And again, you can see it now indicating dark colors, and the dark colors closer towards these highs are suggesting that more people are starting to accumulate. So you can see here at this dip, there's definitely a whole bunch of buying volume coming in here and buying this dip out. So that's really important that we monitor that as well. So therefore, that's what I'm looking at, guys. That's pretty much it, what I'm seeing in the market. For me, it's very clear that these are the moments that you want to buy. This is a horrible, horrible market, driven by scenarios well outside of the control of crypto. So you got Ukraine crisis, you've got the Ukraine-Russia crisis, you've got inflation issues. The markets were down anyway, multi-month bear market. I mean, the global economy is looking like it wants to slow down in towards a recession. And then on top of that, you get a top 10 coin like Luna depegging its stablecoin and really putting the whole market in a bit of a tailspin. So we should be counting our blessings that this wasn't one of those black swan moments which threw us down to 20,000. The fact that we were able to hold up here and even close the weekly candle above the 29,000 really just goes to show that after one of our worst weeks in crypto and 7 in a row weekly bad candles, and the last one being the Luna candle, right? We can call this candle right here the Luna candle. Despite that, we were able to buy this dip up on the wick and close well above the 29,000. We closed the weekly candle impressively. We closed the weekly candle here at 31,328 after a tumultuous, very difficult week. And for me, that is the promising part, because when you go back down to the crazy candles, when we do touch 29 in summer, we did the same thing. We showed some dip buying and we managed to close that candle out at 34,000. So hopefully we can get on a bit of a run. Hopefully equity markets can start to move a little bit green towards the upside, because there's not much they should be worried about. We're going to move towards a normal rate of interest. The Red Bull's going to come off. The government's not going to give you free money. Fine, but let's go earn it. The economies are healthy. Earnings are coming up pretty well generally across the board, and it's just time to get a move on and start moving up. I'm not expecting crazy rallies to the upside, but just start to, if we can start creating some green days, that will help everybody feel more positive. But again, now is the time to accumulate, and there is no better time than now to start accumulating your bags. You really do need to be loading up on your bags right now, but you want to do so in a very precise manner. I'm seeing so many people right now loading up on the wrong things, and they're like, yeah, I'm buying the dip. You're going to get wrecked. This is the time to accumulate the good projects. Do not get distracted by low cap gems right now. Do not get distracted by 1000x's when you've got great, proven, big market cap projects, super undervalued right now. You need to be building out a portfolio of all of those, and you need to be accumulating in the right allocations for every single project. No one project should be able to wipe out your portfolio. Do things the right way in this bear market, and it's going to set you up for many a bull market ahead. If you want help doing that, consider checking out the course member live streams. We do that together. We've literally got a live stream after this video to do that together with our course member lives. We do portfolio critiques, technical analysis, fundamental analysis. We can teach you the lot. Hope you guys enjoyed this video. As always, don't forget to smash up the like button and subscribe. And I'll see you in the next one.